Sir, first of all, thank you so much for joining us today.
Thank you.
You are a 1989 cadre from Tamil Nadu.
I was like,
Yes.
I retired in 23 years. So.
Yeah. You have, of course, I mean, you have been a joint secretary in Ministry of Finance. You have been a secretary in Department of Telecommunication, and now in your role as the chairperson for Gift City and IFSCA. This is perhaps one of the most seminal things that is happening in the country today. So it's a real pleasure to speak with you, sir.
Thank you.
So, sir, I was thinking that Gift City itself is an idea whose time has come. It was conceived almost in the late 2000s. Around mid 2015, it got really kicked off. And then, if I look at the last few years that you have been at the helm of this institution, a lot of critical change has gone through. So maybe I could invite you to just talk to us about an overview of Gift City. What is its strategic importance, and particularly in the context of Indian financial ecosystem?
Right. So thank you, Yashji. I think this, it's a pleasure to be talking to an enlightened organization. I think so because you advise a lot of decision makers. I think both locally and internationally. So this, as you said, I think there is a lot of history to this. So if I may say that in 2014, this got kick-started because there were some enabling notifications issued by the domestic regulators who were asked to regulate it collectively, I think, between RBI, SEBI, and IRDA. So that actually enabled a few early birds to land here. I think typically the public sector institutions like SBI, Bank of Baroda, and a few others. So, but obviously, this was not like a full-fledged, bouquet of enabling orders. These were more executive orders issued by the respective regulators. Now, to get started, that was fine. But initially, the thought process was, how do we get the Indian financial institutions and other businesses which are now currently which had or probably over the last several decades shifted to foreign shores for various reasons such as taxation, ease of doing business, or lack of finance, etc. So typical examples would be the fund industry. I think a lot of India-focused funds actually had offshore, destinations where they were set up and managed from. So Mauritius, Singapore, Cayman Islands, etc., etc. The other example could be the aircraft and ship leasing industry. Where a lot of lessors had actually set up shop in Hong Kong, Dubai, Panama, Liberia, I think Dublin, and many other places. Because obviously there were some special policies and tax regimes, etc., which obtained there, which enabled businesses to become competitive. So there are many such examples. I think so. And the other examples could be things like bond markets. For the foreign exchange bond markets, or the foreign exchange loan markets. So these were all centered around Hong Kong, Dubai, London, I think New York, etc. So the idea was that how do we onshore them? I think that was the initial thought process. So the idea was to then look at how to provide some enabling regulations, some a taxation regime which is equally competitive to that obtains in those jurisdictions, and also create some amount of simplicity and ease of doing business here, which actually aligns itself with the rest of the world. So that brought about the initial set of executive orders issued by the various regulators. But then that did not take us too far, because that did not provide the kind of certainty that foreign investors would want. So there was no scale to the outcomes that were perceived. So therefore, in 2019, it was decided that a full act of parliament would be initiated. So therefore, the government moved a bill, and then in 2019, the International Financial Services Centers Authority Act was passed by Parliament, and by that the Parliament actually delegated the functions and powers that were there in about 16 financial sector laws to a unified regulator called the IFSC Authority, I think. So these 16 financial sector laws include the RBI Act, the Banking Act, the Insurance Act, Payments and Settlements Act, Factoring Act. There are a variety of all the financial sector laws. I think so. All these acts now are now regulated by or implemented by the International Financial Services Authority for the GIFT City, I think, for this small piece of territory. So this, in a sense, afforded an opportunity, because if you look at this act owes its origin to it sits on the Special Economic Zones Act. I think it draws its from the SEZ Act. So the FSCI is therefore a special financial center which sits inside the GIFT Special Economic Zone. So this new regulation, therefore, the new law, therefore, afforded the opportunity, in the sense that it allowed us to rewrite regulations in all these sectors with a clean slate approach. Nothing. We didn't have any baggage of the past regulations to go to. So we have now, therefore, over the last 4 years, put in place about 31 regulations and more than about 16 frameworks covering banking, insurance, capital markets, aircraft leasing, ship leasing, universities, bullion markets, etc. Which are completely aligned with the rest of the world. Because what we did, therefore, before writing these regulations, was to look at what other jurisdictions did, like Singapore, Hong Kong, etc., for each of these verticals, and then picked up all those best practices and international, market practices that would actually sit well with international players who are expected to be here. Now, the proof of the pudding is in the eating. I think we may have good regulations, but if you don't have the market traction, then I think then obviously we could call ourselves a failure, if not a success. But then if you look at the outcomes in the last 4 years, we have about more than 30 banks who have set up operations here, including about 14 international banks. And the total asset size has crossed well over about something like $78 billion. And now they are giving, they are an Indian corporate who wants to raise a line of credit doesn't need to go anywhere. I think to London or to Singapore to raise $1 billion or several billions of dollars. In fact, yesterday a couple of days back, we were in Delhi for running a workshop for central public sector undertakings, because CPSEs are also a set of corporates, many of them whom have international operations. So either for raising finance or for, as part of their global operations itself. So, in fact, one of the banks who were present there in the meeting mentioned that a large Indian corporate had issued an RFP a week ago, to raise about $3 billion, saying that they want to do that completely through the GIFT City banks. So they don't want to go abroad. So this is a private sector corporate. So therefore, I would like to say, therefore, there is a very good traction in the sense that today the banks here, thanks to the tax efficient regime that obtains here, a fairly global regulatory architecture, and a good legal architecture too, so have developed the capability to provide competitive rates of financing. I think so the rates of finance they offer are very competitive, and therefore the Indian corporate sector largely now depends on this. I think so. And if you look at not only the credit markets, out of this $78 billion of banking assets, about $50 billion have been borrowed by Indian corporates, I think, in the form of trade finance or corporate finance, project finance, etc. And if you look at the bond markets, they're also quite deep enough. I think in the last, the total outstanding is about $78 billion again. Out of which about $15 billion are green, sustainable, social, sustainable linked bonds. So therefore, I'm just giving an example. Therefore, the proof of the pudding is, as an example, is the banking sector, where pretty much fast scale up has happened for the banking sector in terms of lending. And if you look at the lending here, 75% of the lending has gone to Indian corporates who are within India. The remaining 25% has gone to Indian corporates who are abroad, who have got subsidiaries abroad, as well as foreign companies who are abroad. I think so. Therefore, now I would say that there is also some amount of broad basing that is happening. There is some regional play which is scaling up. So we would soon expect that there is an opportunity for us to become a regional kind of a financial hub, not just a financial hub for India.
So this sounds so compelling, because the regulatory architecture is of international standard. Compliances are much more streamlined because there's an integrated procedure and authority. There are obviously economic, tax, other incentives which are at the best possible compared to all other centers. And then combined with all that, what you're telling me is that there is depth of market both in bonds as well as in term loans, and it's at a competitive rate. Now, if you put all of that together, I can see that as becoming a very compelling reason for several of global and Indian corporates looking at GIFT City as a destination for raising more capital, certainly debt to begin with. Sir, this is really exciting. Now, if I take a view to just try and compare GIFT City with some of the other financial centers, international financial centers, and you mentioned a few of them, Hong Kong, Luxembourg, etc., Mauritius. How do you compare and contrast? Like, what would you say are the unique features of GIFT City IFSC for us?
Very good question, I think. So, let me to answer this question, let me say that it is also structured differently in the sense that let me explain the structure and then come to why we are different. If today a foreign investor, we saw, I just gave the example of Indian corporates, but let's look at a foreign investor. I think he will probably ask this same question, which probably you ask now. So for a foreign investor, I think there are. India is the second largest market in the world after China. I think therefore, and I think there's no escaping the fact that foreign businesses have to be present in India if they have to be meaningful globally. So, whatever may be the case. So, for a foreign investor to come into India, there are existing two ways. I think before GIFT City IFSC came into being, one was directly sitting in New York. I think you could wire transfer some money into some business, either or invest into the Indian stock markets and then manage your assets remotely through an Indian manager or whatever, I think. Or the second way is that you set up an operations in Mumbai, domestic area, or in Bengaluru or Hyderabad or something like that, and then get your business going. I think that is real hands-on. I think. Now we have provided a hybrid here. I think here, so therefore, this GIFT City IFSC is a bit of foreign territory within India. I think it's a bit of deemed foreign territory. Why am I saying that? Because there are some acts. Some acts like the Foreign Exchange Management Act of India, which does not apply to GIFT City. So therefore, it's a complete exemption. So therefore, there is no. This is a foreign territory. The Indian rupee does not play here. I think there's only the dollar or the euro, or there are 15 freely convertible currencies which are notified as permissible currencies in GIFT City. So this, therefore, there is no capital controls. People can bring in their capital and then take it out anytime. I think they can repatriate their profits without any approval. So therefore, this is mimics itself like a Singapore. I think in respect to India or a New York. I think there are no restrictions in movement of capital. At the same time, if you look at it, we are within India. I think for purposes of say human resources or your cost of operations, etc. They are all Indian costs of operation. So therefore, you get the benefits of both, right? I think so. Therefore, then the advantage is that if you are like say managing a lot of assets, if you are a small asset manager, that doesn't make sense to actually move in here. But if you're managing significant amount of assets, then I think the presence in the time zone also makes a difference. I think because you don't have to take a visa to come here or fly in, etc., etc. You're here in Ahmedabad, and you can move anywhere in the country within say an hour's time. I think to all the important commercial areas of the country. So therefore, the advantages of being in India and at the same time being out of India, I think exists within the international financial center. If you look at the other, so if you are looking at it from other laws, I think other than the Foreign Exchange Management Act, there are several laws in which there are carve-outs. So therefore, the Companies Act, nearly about 50 sections of the Companies Act do not apply to IFSCA. So there are other laws like where there are carve-outs, where there are specific carve-outs given, I think, under specific laws. So therefore, we are trying to work with the ministries also to provide this. Wherever there is a requirement from a business perspective to provide these policy enhancements to enable businesses to actually expand. Now coming to this question, I think why would it be competitive here? I think the answers are multifold. I think the first answer is obviously you get a flex. I've answered earlier. I think there is flexibility here. I think by being in a foreign territory as well as being within India. I think that's the first.
Yeah.
The second thing is obviously the tax holiday. I think there is a 10-year tax holiday within though you're a tax resident. For a business which is set up here and regulated by IFSC. In addition to the various other tax exemptions on various products and financial services that are offered here. So that is, I think that is a too deep a subject to go in here. I think we have tax experts who will probably take you through all of that. But for an income, for a regulated entity here, there is obviously a 10-year tax holiday, which is like good enough for them to actually roll out very efficient services. So this, in addition to that, I think, you are addressing a very large market, I think. So therefore, in the presence of being present in India, I think, and accessing the Indian market is also something of great importance for businesses here. Like, for instance, let me give a specific example of some verticals which have actually scaled up very fast. One, I gave the example of the banking vertical. I think similarly is the case of the fund industry. There are more than 200 funds which are registered here by about 135 plus fund managers. I think out of which, I think if you look at the operational entities, I think because many of them have been registered in the last say 6 to 8 months, and they are in the marketing and distribution phase. So there are more than about 80 of them who are operational. I think so, and between all of them, at least about they have invested about $5.5 billion so far. I think the cash flow, the funds pooled and invested is about $5.5 billion, out of which $4.5 billion have gone into India. Almost $1 billion have gone into the neighborhood, I think, in various other countries, including the Middle East and other countries. So so this is an example where I think the fund industry has moved in from various places. Otherwise, these funds would have got registered in these jurisdictions which you just mentioned.
Correct.
And by the way, I think the government of India, the finance ministry also has provided a very tax efficient way of moving a fund or relocating a fund from some of these jurisdictions into the city. So as we speak, I think at least about 16 funds, alternate investment funds, have been relocated from various jurisdictions.
Capital gains has been addressed.
Yes. Out of these 200 funds, I think about 16 of them are relocated funds from many of these jurisdictions.
I see.
From Mauritius, Cayman Islands, Singapore, and a few other jurisdictions. And if you look at all these funds, I think, let me also give another piece of information. The 200, the more than 80 funds that are operational here have more than 2,500 investors coming from 50 jurisdictions who have invested their money into these funds. So therefore, now the LP interest is also quite widespread, in the sense that many people now know about GIFT City and are willing to take the bet. And we always believe that the whole thing is, the last answer to your question is also the certainty of policy. I think things have been improving in GIFT City, and there have been no retrograde actions which the government of India is very committed to prevent. So therefore, I think consistency of policy and constant enhancement of policy is what I think investors expect. And that is what has happened over the last 4 or 5 years. And we expect that to happen in the coming years as well. And let me end by saying the tax is one of the elements, I think, which people look at. The tax certainty that obtains here is higher than what it obtains through, say, when you are operating from foreign jurisdiction, you are typically using a treaty. So treaty is always subject to interpretations on substance and other things like
case by case basis, right?
Entitlement and so on and so forth. So therefore, the hardwiring of these benefits in the Income Tax Act is also an element of certainty which probably we should highlight.
Sir, this is quite comprehensive, because the fundamental argument you are making really is that you get access to probably the second largest, presumably the largest in the near future market, through very certain, predictable and friendly terms. And that just without all the capital account convertibility challenges and repatriation challenges and carve-outs specially created among several of Indian regulations and laws. So this is really a comprehensive and a well thought out effort. And if there are players from 50 different jurisdictions that are looking at this, then it's also been tested across many different scenarios, and it seems to have passed that muster. So, sir, now one can assume that on the back of all of this, there must be some exciting activity happening on the ground. A little while ago, you and I were looking at a demo being done by a startup on the AI system within GIFT City. But maybe that's just the surface, and there must be a lot more activity happening. So could you shed some light on some exciting ideas that you are seeing flourish in your backyard, and that could inspire the listeners to also come and do more of that in GIFT City?
Thank you. I think so. This is a very important point that you made. See, Gift City relevance would be there if we are able to provide services which do not obtain in India. I think this is something, and I will answer that in several ways. It's just not our innovation is not only about technology, but the ability to provide products which generally the corporate world or individuals would go abroad to seek because it is not available in India. So just like for instance, banks here in Gift City can provide acquisition financing. So, like for instance, the Honorable Prime Minister's vision of Viksit Bharat at 2047 is all about how Indian businesses can scale up to become world champions. So, over the next 25 years, I think the proof of the concept would be laid out. So, but all that would require cost-efficient means of raising capital for the Indian corporates. And for that to happen, I think, I already have mentioned how the Gift City banks have become competitive, with respect to the rest of the world. But this is not only about raising capital for their own projects in India, but companies can become world champions provided they are able to acquire, do mergers and acquisitions of technology companies and other manufacturing facilities across the world. So, for them to raise cost-efficient finances for acquisitions is also very, very important. So we have enabled that acquisition financing in Gift City, which probably, I think a few companies have begun to use. So therefore, this is also something which might be of use as we go forward when Indian companies scale up, their operations. The other set of products like which are available here, I think, normally in domestic India, leveraging by hedge funds is not allowed. I think so. Whereas, Gift City banks are allowed to lend to hedge funds to actually trade in the markets.
Oh wow!
Yes. Okay. And a third thing is like things like syndicate financing for very large loans. Some of the Indian corporates raise. I just mentioned the case of a large Indian corporate who has issued an RFP for $3 billion. $3
billion.
So, yes. So therefore, I don't think there is an Indian bank. Normally these are done by syndicates. So therefore, those kind of syndicate financing is now happening in a very large scale for, typically, like say, for acquisition of aircrafts. I think, like for instance, Air India does syndicate financing for acquisition of, hundreds of aircrafts. In fact, they set out a target of about 1,000 aircrafts over the next 10 years, and therefore, which means that it's almost like 100 aircrafts a year. So, which means that the scale of financing that will be required by some of the Indian corporates and many of the sectors would require. Larger banks, with deeper pockets, more banks, I think across, who want to kind of have, take a share in such a very large, I think a tranche of credit, etc. would therefore would be possible out of Gift City. Then, if you look at the other kind of innovations that are happening here, see, the advantage that we have is that of a unified regulator. So therefore, our regulations can span multiple sectors. I think multiple verticals for that matter.
Correct.
So here, like for instance, we see an opportunity of an entirely different kind. There are, where I think the innovation is on the cards, but I think it might happen in some time to come. There are more than 15 million non-resident Indians who live abroad. And there are more than 19 million persons of Indian origin, I think. So there are 35 million diaspora, out of which I think I would expect that at least 10% would be HNIs and UHNIs. So, wealth management of some of these people, I think is something which is a very big. In fact, if you look at some of these jurisdictions like Singapore, Hong Kong, Dubai, etc., they have become wealth management hubs. Because they work on variety of these HNIs and provide them a variety of products. So right now, I think I'm happy to say that one of the large international bank here has launched a wealth management unit just about a week back. So and there are two other banks also which have launched wealth management units. So we expect many of these banks who are in the retail banking space to actually scale up their wealth management practice. And when you look at the wealth management practice, it's just not about just banks. I think it is about a variety of other entities which are part of this play, which include alternative investment funds, retail funds, mutual funds, portfolio management services providers, people like insurance on ULIPs and so on and so forth. So I think what the bullion markets, for instance, I think so. Yeah. So now the Gift City ecosystem is well poised to actually offer a variety of these products for the retail investors. We have just got started. I think because we have about 6,000 retail investors, NRIs. who have invested more than $1.5 billion dollars. I think here now in the deposits. I think in banks. So some of them are structured deposits, term deposits, time deposits, etc. So, but this is just the beginning. So now we are seeing a lot of these alternative investment funds offering specialized products. There are, I think we expect that since the finance minister announced special tax provisions for the exchange traded funds and mutual funds, we will see very soon see some of our players launching retail funds as well as ETFs. And some of these could be bullion-based ETFs, precious metal-based ETFs as well. So we would see. Our focus would be on ensuring that there is a complete holistic set of products which are available for HNIs to invest in dollar or euro and whatever terms. I think in foreign exchange terms, because they just don't want to invest in rupee terms in Indian markets, but they also maintain and invest in global markets, and that would be affordable and possible out of GIFT City as well.
Sir, this is again, I must say, it covers so many aspects to ensure that all angles are thought about. You mentioned that locations such as Singapore have become attractive destinations for wealth management. It's certainly for three reasons. There is an access to multiple asset classes. And you have already said that you are also bringing out so many different asset classes: ETFs, AIFs, debt, equity, bullion, commodities, and so on. So I think that's amazing. The second is that people who bring capital into Singapore can access assets within Singapore, whether these are institutions, companies, or just real estate and otherwise, right? And that also, of course, why GIFT City comes in. And thirdly, all the geographies around Singapore or other areas from Singapore where capital can flow. So I think all of those three options are open. And it's now really a matter of getting a critical mass going, which seems to be falling in place. And with the right momentum, this looks quite exciting. You already alluded to Vikasit Bharat and the criticality of the role that GIFT City is going to play in supporting that. And you briefly touched upon acquisition financing, capital provisioning for growth of Indian corporates. What other aspects are you thinking about in terms of the Viksit Bharat and 2047 vision?
So, if you look at the largest pieces of this Viksit Bharat, I think there are 2-3 things that appear important. One is, of course, the capital raise for infrastructure and net zero financing in India. Both climate transition, etc. In fact, there's a large number of businesses which will need to undergo transition to enable them to become globally competitive and also sustainable from an internal point of view. So the green bond and sustainable bond market in GIFT City, which has picked up very well. We have a green bond framework and with a very strong disclosure mechanism, and both the international exchanges. I think NSE IX and the India INX, and out of which India INX has got a very important role to play in the bond markets, have actually done a very creditable role in building up this market. There are more than 150 issuances that have happened. I've told you about the $78 billion issuance, outstanding. So about more than 40 issuers have done these issuances, and there are investors across the world who have actually invested in these bonds by very reliable and reputed companies in India. So the India at 2047 will require both equity and debt. And I think both are important for infrastructure, green, yes. For net zero and so on and so forth. So if you look at equity, I think we have a very large number of private equity funds here, I think, which invest both in the infrastructure, real estate, and other kind of commercial space as well. So we have a special dispensation for ESG funds as well, a special disclosure mechanism, and also we have not to promote them, we have decided to waive the fees payable by the first 10 ESG funds. So as of now, I think 2 ESG funds are live and running. So I think 2 Indian fund managers have actually launched them. I think we expect more. There are more applications for climate and ESG funds under consideration. Eventually, we want to become a sustainable and a climate finance hub. I think because we may do a lot of equity and vanilla equity and debt financing, but I guess there is a part of the world. Though of course current geopolitics have actually fractured the world in respect of its outlook on ESG and climate. But we believe that there are several parts of the world which are very strongly wedded to green and sustainable. So we believe that the investors from these regions, these regions come with investors with very deep pockets. And I refer to Europe and maybe Japan and Australia and many other countries. So there are trillions of dollars whose appetite is on green, and sustainable. So we believe that GIFT City can become a very important platform for them to kind of pool these kind of investments and then invest them into India as well. If you were to ask me, our overall effort will be to look at how we are able to keep the cost of regulation and the cost of compliance at the barest minimum, whatever is required for financial stability and market integrity, etc., and ensure that the cost of fundraise out of GIFT City is very, very attractive. I think so, and the cost of, by keeping the costs of doing business here quite low, and therefore making available the finances to Indian corporates and businesses at the lowest possible rates. This includes not only project and corporate finance, but also trade finance for SMEs, because this is very, very important, because the next wave of Indian growth would also come out of manufacturing from mid-sized and small-sized Indian companies. So for them to scale up, I think for them to grow, I think it's very important for us to meet the unmet need for trade financing. So we today, in fact, today morning also we had a workshop on trade finance. We have a number of international trade financing platforms which are similar to the TREDS platform in domestic India, where bill factoring would happen. I think so. Now, a few $100 million of transactions have happened. The total trade finance given by banks out of GIFT City has crossed $15 billion, while the bill factoring is now currently maybe about $100 million. So we want this to scale up rapidly to meet India's export growth target of about $2 trillion by 2030. So that is also one important target that we have as part of the Viksit Bharat agenda. So, I will also say that, while in money terms, I think to provide cost-efficient source of financing and financial services is one part. I think the other part is also to act as a technology hub, because today the dividing line between technology and finance, as we saw in the BCG's presentation and the presentations made by Finulate and other companies, is that I think the technology will be a big driver of financial services in the future. I think it already is. So like the case of the UPI in India. So we believe that GIFT City can play the role of a very cost-efficient platform for developing technology for the world. I think so. Already Indian IT companies have come of age. But we in GIFT City have provided a tax-efficient way of further becoming very competitive in the global space. So therefore, companies, in fact, some of the top technology companies in India have actually launched their businesses. Have got their authorizations very recently. Cognizant, Infosys, Wipro, and others. So they are likely to launch businesses for the BFSI sector. For the globe. So which means that we want to be a place where I think, and in fact, the government of Gujarat recently has also launched a very competitive global capability centers policy. This was just released a couple of days back. So therefore, coupled with all of that, we also want to become a hub for global capability centers working on technology in the BFSI sector as well. So I will stop here, I think.
No, sir, it covers a lot. Can I also probe a little bit? You mentioned earlier that for educational institutions also you have created a policy framework. And if I can just conceive that if you combine the right regulatory environment, the right economic environment, all of these institutions with a great talent pool and an educational hub, that can be a fantastic combination for the long term. So is there something that you can talk about with regards to that?
Yes. So, this thought process has been going on for a while, because while the core financial services companies here would require people in the mid-level, mid brackets and higher brackets. So therefore, I think they will depend on the existing manpower in the financial sector industry in India and maybe in the neighborhood. So whereas if you look at the global capability centers and and other advisory services which center around bookkeeping, accounting, taxation, financial compliance services, advisory service, etc. They will require more people in the bottom of the pyramid. That is freshers and people with about 5 years of experience. So for that, I think, setting up a proper talent pipeline framework, I think, is very, very important. So therefore, thought process came about how setting up a universities here which will provide postgraduate education, not the basic undergraduate education, postgraduate education in higher end of the STEM, which includes things like computer science, cyber security, AI, ML, etc. And also in financial services, fintech, and so on and so forth. So as we speak, I think there are 2 universities whose campuses are already live. I think the Deakin from Australia, Deakin and Wollongong from Australia, 2 universities have actually launched courses, and they are all postgraduate courses. They also plan to scale up into executive education for the financial sector, and also provide move into R&D as well, I think, in some due course of time. There are 2 other universities are in the final stages of making their announcements. That is one is of course approved by us. That is the Queen's University from Belfast, and the University of Coventry and the University of Surrey. All these 3 have actually announced their plans, and so all this they will work in STEM and the financial services area, so that they will provide a big pipeline of specialized talent. Of course, I think if you look at the immediate environs of GIFT City, I think we have very large universities. I think you have the Indian Institute of Technology, Gandhinagar, the Gujarat National Law University. I think the Energy University, which all of them have more than a few tens of thousands of students who study in technology, law, management. The IIM Ahmedabad, in the Ahmedabad University. So all these already provide a pipeline of talent. If you look at the chartered accountant profession, I think out of the 500,000 strong Indian CA professionals, 10% of them reside in Gujarat, I think. So the more than 50% of them, 50,000 of them are in Gujarat. So, I think all this provide a very robust talent pool. And by the way, Gujarat is also a manufacturing hub. So we have an ample source of financial sector professionals who work in some of the very large corporates, who are based in out of Ahmedabad as well.
Sure. Fantastic. Sir, maybe as we wind down this truly fantastic discussion, I want to just leave you with two questions, and you could walk us through them. What's your vision for GIFT City over the next few years, and what is the message, therefore, that you may want to pass to those institutions who are not yet part of GIFT City? How should they be thinking about it?
So given the fact that this platform is about providing one more option to foreign investors and to Indian corporates, I think. So it is not it is an add-on, I think, feature. So therefore, a good governance is all about providing options. It is not about shutting the doors on and showing only one door out, I think. So the idea is to, if you want to make your businesses competitive, then I think you have to provide them, because each business comes with its own peculiarities. Everybody may not want to be in GIFT City, I think. So there are people who have very specialized requirements. I would like say, take the case of the fund industry. The fund industry has to raise money from thousands of investors across the world. Each of them come with a particular set of requirements. The investors want flexibility, ease of doing business, etc. So therefore, we have provided these facilities so that I think we are able to take care of the concerns of those investors. I think they want some tax certainty and so on and so forth. So similarly, I think there are certain forms of businesses which require more flexibility, which does not obtain in the domestic area, I think. So therefore, like say aircraft leasing, ship leasing, etc. People would want to repossess aircrafts and then move them out, without the least of difficulties. People would want to move out financial assets also, I think within 24 hours and so on and so forth. So all those flexibilities are there in GIFT City, which one would not find in the domestic area, because obviously the domestic area operates for a different reason, I think, for a different purpose, for a different set of clients, and so on and so forth.
That's right.
So therefore, this is an additional option given to the Indian corporates to use, I think. So let me give an example before I close. Like for instance, the ONGC Videsh Limited, I think. So it's an offshore arm of the ONGC, which is India's oil exploration company. So it's it is a company which is located within domestic India, but they manage about 25 assets across the world. I think. So therefore, for them, I think there is a need for a treasury center which actually manages their cash pool and movement of investments effortlessly. So they found that, I think GIFT City to be the best place to be in, I think. So they have centered all their operations here. Similarly, the case of say companies like like a Power Finance Corporation, I think. So the Power Finance Corporation has got a very long goal to achieve. They have more than about 300 gigawatt of renewable energy projects in India, which are in the process of being completed, which requires a lot of financing. So that requires nearly about $300 billion. So PFC is a process, along with IRIDA and REC, have to raise a lot of financing to finance both the private sector and the public sector organizations who are involved in the green energy projects. So they have launched, I think, an office here, an NBFC here, which actually will raise a lot of line of financing for them to finance the process. So therefore, the idea is to provide those options to various investors. Similarly, I think I'll give another example. I think this comes from the agility to actually amend our regulations, which based on the need of the investors. I think Suzuki Corporation wanted to set up an impact fund. I think Suzuki Corporation Japan. So to invest into impact startups in India. I think so. Therefore, they had wanted a certain specific regime, I think, which was not available in a normal fund ecosystem. I think they wanted 100% contribution. Normally a fund manager doesn't make 100% contribution to the fund. So we amended our fund to provide for such kind of entities, which subject to certain conditions, I think, so which Suzuki was able to fulfill. Similarly, I think we have created a special regime for sovereign wealth funds, I think, because so the Abu Dhabi Investment Authority has set up a very large fund here, I think, which invests into India and in the neighborhood as well, I think. So we have provided a special regime for them because sovereign wealth funds are run by governments. So we have greater amounts of trust with them. Therefore, I think we have provided them flexibilities, which normally we wouldn't provide to a normal private equity fund manager. So these are some of the things which we believe we will do going forward to enable various classes of investors to come in a big way. In fact, the recent announcements of certain tax provisions by the Honorable Finance Minister in the budget of this year will also provide a variety of other use cases by some of the large fund managers and other businesses here. I think, like setting up of treasury centers, I think a special tax provision has been brought about. We also believe that the safe harbor regime, which is now being provided, will also attract global fund managers to come into GIFT City as well, I think. So therefore, we expect to do certain policy enhancements to attract classes of investors who are not yet here as well.
Sir, strategic advantage has always been in our line of business about finding something that is unique, very hard to replicate, and is scalable. And I think the last several minutes, maybe 45 minutes of discussion that I have had the absolute pleasure of having with you clearly reveals that here is a place which is genuinely a globally integrated center with unique access to India and many enabling features in terms of economic and regulatory and policy measures. So it's very, very, very promising. I really enjoyed this conversation, and I want to thank you once again for taking the time and the effort to walk us through so many of the nuances and details. I look forward to seeing you soon. Thank you very much, sir.
Thank you very much. Thank you. Thanks to you, Dr. Stena, and your colleagues in here. Thank you very much.
Yes, thank you.